Hi, welcome everyone, and good morning. Thank you for tuning in to today's webinar on the cannabis banking landscape. My name is Nancy Patton. I'm with Saltmarsh, and I'll be your moderator today for this webinar. Before we begin our presentation, I just have a few housekeeping notes to mention. First, everyone on the line has been muted to limit disruptions. If you have questions, you're welcome to share them with us using that questions feature in your GoToWebinar control panel. At the end of our presentation, if we have time, we'll discuss your questions together, and if not, we'll follow up with you after the webinar concludes. Today's webinar is being recorded, and you'll expect an email tomorrow with links to the recording and also the slide deck. Finally, upon leaving the webinar, you'll be prompted to complete a very short survey. Please take a moment to share your feedback with us on your way out. We'd love to know what you thought about today's presentation and any topics you would like to see from us in the future. At this time, I'd like to introduce our first speaker, well, first and only speaker, sorry, Kristen Stogniew. Kristen is a shareholder here at Saltmarsh, where she leads the firm's financial institution consulting practice. She has more than 25 years of experience within the industry and is no stranger to the banking compliance stage. She frequently speaks at the FBA and the CUNA management schools. She teaches compliance and regulatory environment and social media classes for the Florida School of Banking at the University of Florida. And this year, she's joining the faculty for the Graduate School of Banking at LSU. Kristen, I'm going to kick it right over to you to get us started.
Thank you, Nancy. I'm happy to be here. Good morning, everyone, especially to our friends out on the West Coast. Good early morning to you. Thank you for being here. I want to start off by thanking our friends at Engage-FI. They really helped us get the word out on this webinar, and we've got a broad reach. We're in 29 or so states. Which makes it a little exciting and challenging for me because the topic at hand is extremely state specific. But I'm just thrilled. Engage-FI, like us, like Saltmarsh, is a Florida-based consulting firm that has a national presence. And they, like us, also appreciate the value of being informed and educated and sharing that knowledge with the industry, just like this webinar today. Engage-FI, if you haven't heard of them, they work with financial institutions to improve their payment offerings and digital systems and services, which has been so important here lately. But they do this by driving better vendor contracts and relationships. Who doesn't want help in that area? In my opinion, it's all about the systems, and they're the experts that can guide you in selecting systems to fit your needs now and into the future. Again, there's many of you on the call who don't know me. I do see a lot of my clients and friends registered as well, so I'm happy to see your names there. I wish I could see your faces and be in the same room as you. For those that don't know me, I do head up our consulting practice here at Saltmarsh. We are a regional accounting firm based in Florida, but we have a larger than you would think consulting practice for credit unions and banks throughout the nation, and we specialize in regulatory compliance, internal controls, internal audit, BSA, anti-money laundering, interest rate risk, ALCO type issues, credit reviews, member business loan reviews, all the things that a financial institution really needs help with on a go-forward basis to get through exams and to be more efficient and in compliance. I'd be happy at any time after this event to talk with any of you about other services we provide or how we can help you. Today, we have 1 hour. We're not going to solve all the issues in 1 hour. I mean, this could be like a 4-day class. So I have a lot of slides here that I'm not going to obviously read. Some of them I may not even address in very much detail. So, but they're here for you, for your resources. If there's something that you have a question on that I did not address, please just post it in the question box. Or if it comes to mind after the event, you want to fill out our webinar survey or email me at any time with your question. I can get directly with you or get you the resources to get your answers. This is our agenda. And again, it's an overview and it's not specific business or legal advice. We're going to tackle the biggest problems I see in banking the industry, the ones that really bother me, and 3 practical best practices. And so, again, not granularly into the details, but hopefully giving you enough confidence that you know what questions to ask and how to successfully bank this industry, or give you the confidence that you're not banking it. So as of today, because everything changed, I should say actually as of yesterday when I completed these slides, we have, significant number of states that have legalized marijuana, whether it's adult use, which some people call recreational. I prefer the term adult use, or medicinal purposes of some form or fashion. So, as well as hemp, which is also part of cannabis. If you get one thing out of today's session, I want you to recognize the state-specific aspect of this topic. And whether it's cannabis, that's cute, hemp or cannabis. So whether it's legal or not, whether your client is breaking the law really has to do with what the product is and what state that product has come from or is being manufactured, grown, manufactured, processed, and sold in. This is a growing industry. I'll go back here. Ever since COVID, cannabis was actually determined to be an essential business, and it really grew. It's in the last year, there was about 25 billion sales of product, which is estimated to be only 25% of the potential revenue. So it's not only quickly growing, but it has a long runway ahead of it. On this call, we have folks from states that have legalized adult use, all the way to states that have prohibited even hemp. So I'm going to try and give you, again, a broad understanding of what questions to ask. The first big one is it's very definitional. What is the product that you're talking about? It's all cannabis. Marijuana is the Controlled Substances Act, Schedule 1, that's all parts of the plant cannabis, but excluded from the definition of marijuana is hemp. And that's those plants that have a delta-9 THC of less than, or at least not more than 0.3%. I have in that slide highlighted the word total because the definition of hemp comes from the Farm Bill, but the USDA, when they wrote their final rules, they added the word total THC. So it's not just delta-9, but it's also the acids that can be created during the processing. So that's a very key, obviously a key definitional aspect of the difference between hemp and marijuana. Hemp can become hot. It can increase the levels of THC to the point where it just legally becomes marijuana. And marijuana is illegal. So that's one of the biggest issues of working with hemp businesses or hemp related businesses. So THC is what gets people high. It's literally bred, marijuana is literally bred for high THC, and hemp is literally bred for high CBD. They're kind of counterintuitive. So CBD are the areas that are non-intoxicating and have a lot of research and information about health benefits. Still a lot more to come. I also want to impound upon you the fact that this is an entire industry with supporting casts, not just the growers and retailers that we think about. And so this is actually kind of a summary of the verticals from the investment and acquisition firm called RIV Capital. And I'm sure there's many more out there and many other ways to kind of dissect the opportunities in this industry. But for this purposes, I just want you to see that there's phases of getting into this market. And the first three here, we think about those that directly touch the plant. There are industry white papers out there that kind of recognize these as tier 1 cannabis related businesses, whereas the others are those ancillary businesses that support the businesses and individuals that actually touch the plant. So huge amount of opportunity. FinTech is, as it is in general, getting into this space and providing some of the gaps, solutions for some of the problems that we're talking about today. Wellness products is big. There's people that are into the product for health purposes and when they work out, or especially again during COVID or other stresses of life, looking towards these products to help with stress relief. and in some cases replacing alcohol. So a lot of opportunity here. This other slide really brings up some of the problems of today. These are businesses and individuals that you would have no problem opening accounts at your credit union or bank. But because many of them could actually support the industry, and some of them specialize in that, obviously trade associations and consultants specialize in, getting this industry off the ground and understanding how to make it profitable and stay in compliance, educating and security, physical security for the product and for the cash that's generated by it. Lawyers and accountants, depending on the state, they've been given grace to provide services to the industry, even though it is federally illegal. Staffing companies, I want to talk about. This came out from Leafly Jobs Report, and because marijuana is illegal, it's not included in, the various Department of Labor statistics. So they did a survey on the jobs that were supported by legal cannabis. They, on average, last year created 280 new jobs per day. I mean, that's incredible amount of new business. America now has 3 times as many cannabis workers as dentists. They outnumber insurance people more than hairstylists, barbers, and cosmetologists combined. By the time I'm done here, 30 new people will be hired into the industry during this hour session. They added over 100,000 new people in 2021. Just as a point of comparison, the financial services industry, which is very broad and one of our country's largest occupations, added, I guess I would say 130% of that. So they're at 70% of our growth of people coming into our industry. So what this shows is that it's very difficult for you to avoid banking cannabis. These people are receiving funds from cannabis and they're everywhere. So we have some problems that I want to talk about. 3 big problems. The first one is, again, cannabis, marijuana is federally illegal. Hemp can be illegal depending on whether it hits the definitions, meets the definitions of the state or USDA program under which it's legalized. So we know, because many of us are BSA professionals on this call, otherwise I know you've had training. If you're with a financial institution, it's a required pillar, that we have to file SARs, suspicious activity reports, when funds over $5,000 of illegal activity come into our institution, whether it's actually brought in or it's attempted to be brought in. And so it's very broad definition. So in theory, you would be filing SARs on every person, any one of those ancillary businesses and every one of the cannabis related businesses that comes into your institution. Well, FinCEN gave us guidance in 2014 that allows for at least a limited SAR reporting, just to acknowledge the fact that you have businesses that are complying with state law, and they are requiring you really to look at 8 stated priorities. We're going to go into details on these later, but I'll just, for many of you know that those priorities came from a Department of Justice memo called the Cole Memo. It has since been rescinded, but all evidence points to the fact that FinCEN is standing behind this 2014 guidance. So the question I bring to you that I have a problem with, and I think you guys are struggling with too, the banking industry is what about all these ancillary businesses? If in fact we do recognize that they are serving the cannabis industry and bringing in proceeds of that illegal activity to our institution, do we need to file a SAR? And FinCEN did not address this topic in formal guidance, unfortunately. What they gave us was a footnote in this guidance that says you may file SARs based on existing regulations and guidance. So I hate the word may as an attorney. Let's be clear, is it you must or you should or voluntarily may? I don't know how to interpret this from a strictly, purely legal standpoint. a SAR would be required under the existing regulations and guidance. I can tell you that depending on who you are, you can, not depending on who you are, but I can tell you that I have clients and have heard about other institutions who have received email guidance from FinCEN that says, we don't want SARs on these ancillary businesses. I personally have talked to law enforcement who says we want SARs on everything, of course. The important point is that you have a regulatory clearing for which way you want to go on this. Obviously, you have to have a good system in place to identify the proceeds of illegal activity, whether it's ancillary businesses or not, which leads me to the second big problem I see. So many of you have a policy just not to bank any type of marijuana business. Hemp, because it's federally legal, many of you will have a allowance for that. If we were live in a room or we had time to do polls, I would ask you, how many of you have this kind of a policy statement? So here's the question, given the growth of the market and the number of providers, how on earth are you able to identify and prevent these from coming into your institution? You don't know what you don't ask. So many of you don't ask this question on your new account opening documents, what are customer due diligence or CIP type documents. Do you derive revenue from marijuana related activities? You really should. You need to have that, something that at least is an initial step in asking that question. Do customers lie? Heck yes, they do. At the bottom is just an instance, one that actually got prosecuted of a business that lied at account opening. They claimed themselves to be a wellness and fitness center. And then they were really operating an illegal marijuana business and were depositing cash in significant structured amounts, and that's what got them. Hopefully no one on this call is in the industry and wanting to learn how to bank illegally, because that's not what we're about. We want to have transparency. And also you won't find what you don't look for. And so understanding that structured cash is a very big indicator of a potentially illegal cannabis business. Smelly cash, activity that is unusual for the stated purpose. It seems like a retail type dispensary or a nursery that may say they're growing tulips, but the end user of those or the intermediary processor is not a tulip manufacturer or tulip processor, then there's your sign, there's your red flag. So you have to look for it. Many of you will use automated word searches for things like green or doobie or reefer, but the reality is of all the thousands of businesses that are involved in this through licensure states of all those different states, many of them don't have those names in those words in their names, and so you're ending up with a lot of false positives. I just was looking at one AML system that had the names all turned off because the BSA department was getting almost 100% false positives, and it was a lot. And so that's not necessarily going to be the way to go. I will tell you, there are vendors out there that really do support your efforts in this area and keep track of licensees and can run automated queries against your customer base or potential customer base to tell you if they're at least a known licensee. Otherwise, you're left on your regular automated systems to identify like you would for any other random business, whether they were engaging in illegal activity. But I will say having a no cannabis policy may simply be unrealistic and impossible to comply with. And so I go back to your basic blocking and tackling, having good questions on beneficial ownership at account opening, doing due diligence on those people, or are they involved in other cannabis related businesses in other states, asking the questions on onboarding and monitoring, and having your, the rest of your program at least targeting this issue, acknowledging that this is a concept and you're going to make your best efforts to identify these ancillary or direct businesses involved in cannabis. And then the third banking problem is really kind of the worst case scenario, and it's really what keeps institutions from jumping into serving the industry. It's largely cash based, so in some instances you really want to help it. You want to keep that cash out of the community. You don't want to have the cash on the streets, but you do have the risk of being prosecuted, okay, because it's federally illegal, aiding and abetting, criminal penalties, or having your or your customers' assets forfeited. Illegal activity is still happening. There's a Rohrabacher Farr Amendment that prohibits federal spending on prosecuting state legal medical marijuana businesses. So it's a very confined space. And again, it goes back to the fact that illegal activity is still occurring. Is any business you may open state legal? And of course, it's only limited to medicinal. And then civil asset forfeiture. Yes, Imperial Logistics is a recent case. Google it if you haven't already heard, but kind of confounded by the fact that these equitable sharing programs between state and federal government of any assets forfeited kind of prompts or might encourage even local law enforcement to take action. The Imperial Logistics case was about cash being transported across state lines, and funds were taken from the courier, the armored car courier. The CEO of Imperial Logistics is a very knowledgeable banker in the cannabis space, and so with the lawsuit back, she was able to get back all the funds just within the last week, we heard. So these are really important issues, and one thing that may help solve some of these is the Safe Banking Act, if it passes. We're waiting to see. The Senate needs to pass it still. There's been obviously this is a political issue too. And I'll be honest, I am not the biggest political follower. I kind of stick my head in the sand when it comes to it, and I deal with the cards that are dealt to me. I do on the regulatory side, write comment letters occasionally, but when it comes to lobbying, it's definitely an interest of mine, but it's not something that I spend much time doing. So I will just say, here's some bullets that I created. The act is not long, just to kind of give myself some framework over what might happen. One thing I have heard is that it's not going to help the cash problem because payments, of course, are multi-state. And all this really does, this doesn't legalize cannabis. All it does is prevent financial institutions and cannabis businesses and their service providers from having regulatory action based on solely the fact that the bank is, or credit union is banking the industry. What else it does, which I like, is FinCEN is directed to update that 2014 guidance, and maybe they'll address some of the problems that it doesn't answer. It will, of course, this rule will make even the ancillary business problem and SAR filings go away. And it will give us new exam procedures, which would be nice, uniform. But the question remains, is the industry actually unbanked? FinCEN puts out a banking update for marijuana quarterly. There is about a 6 month lag on the data that comes out, but this one just came out, and it shows that since the last quarter, 32 new institutions have at least filed SARs related to the limited SAR, which indicates that they are actively banking the marijuana industry. If that's correct, and we don't really know it is, it could be an overstatement, but with 553 banks, that's 11% of the banks in our country, and 202 credit unions, which is about 4% of the credit unions in the country. And I'm based on anecdotal evidence, I think a handful of banks and credit unions in that space have the lion's share of the industry because they really specialize in it. Then I think you could say that maybe the industry isn't unbanked. There are people who believe, and I could see it to be potentially true, that if a cannabis business isn't banked, it's their choice, and potentially because of the compliance burden of having a bank account. because of the due diligence that we're about to talk about, and other transparency that financial institutions require to take on the industry. So that's an interesting issue, and we'll see if the passage of the Safe Banking Act really does change any of those numbers and get you guys in. Another question I'd like to ask is, if you're not actively banking it, well, I want to know if you are, but if you're not, would you consider it with the passage of the Safe Banking Act? So the first step in deciding if you want to bank this industry is reading the marijuana guidance that we talked about, 2014. It's been issued, and I think it's interesting that they do say the goal is to enhance availability, but at the same time they give you a pretty rigid structure to make that happen. They do start with the business objectives, risk assessment, and capacity to manage risk. I mean, this is banking 101. Create that cannabis banking risk assessment. And I do still see institutions that have dipped their toe into the industry that haven't really spent the time on this step. And to me, it's a no-brainer. You're going to do this kind of analysis anyway, whether you're sitting in a boardroom or lunchroom, just brainstorming. You're going to come up with what-if scenarios. What is the worst thing that can happen, and how can we mitigate that? So why not create a risk assessment to document your efforts? Why not create that living, ongoing, updatable? This once a year risk assessment update is not appropriate for cannabis banking. Have this in place for training, for your auditors, for your regulators, wrap it up in a bow and have it there to show that you've done your work. And yes, it's true. I think every auditor or every examiner can criticize or recommend something about a risk assessment, because there's no law as to how it needs to be done. So it's mainly opinion and judgment. But that's okay, because that's what banking this industry is about. It's about learning it and understanding it and adjusting as lessons are learned and rules or laws or products change. But it really does change based on what products or services you're offering and to whom and which states. So I do think that the mitigating factors are super important. I'll talk about them for a minute here. Later on in this slide deck, I've got a gap assessment based on FinCEN guidance of the 8 priorities. And that's really documenting some things that you can do at your customer due diligence or your ongoing monitoring, CIP and onboarding and monitoring to hit those 8 priorities. That's a basic, because we've got that, unless and until they change. Having somebody responsible for the program is very important, and not a salesperson. Having someone who's detail-oriented and risk-averse that can kind of ratchet back and think through some of these finer points, I think is critical. You may want to consider having some monetary limits as far as what dollar of deposits will you allow, or transactions. Is starting small to learn more about it and prevent large problems from happening. Some of the balances can be really, really big, and for smaller institutions, it can affect some of your regulatory ratios and your liquidity positions. So starting small. Consider branding different from the main institution, or using fintech options so that for the reputation risk, your institution isn't necessarily associated with banking the industry. This is something, obviously, you want to talk with your regulators and your legal counsel about, but I know a lot of institutions are doing it for their digital platform, so I see this as no different if you're going to bank cannabis. Plus, from what I've heard, if you are known in the industry as banking cannabis and your customers write checks drawn on your institution, those payees or payee institutions may close those accounts of your payees because they realize it's funds derived from illegal cannabis. So part of their due diligence on their side. Consider opening them on a separate branch of your system so that you can do detailed reporting and analysis. Also, I would just say, because of the asset forfeiture issue and other concerns, the industry is known for having complex ownership structures. So whatever you do on a norm for your business ownership, beneficial ownership, enhance those on this product offering and these type of accounts. And I've learned this from experience with a client is including a kill switch that gets you out of the business, that has a plan B in the event, for whatever reason, you're required or desire to get out of the industry once you're in it. Also, obviously, allowing you to close the accounts of anybody. I think somebody has said you want to weed out the people that don't support you and comply with your programs. Other third-party risk management, I mean, that's just general guidance that the regulators have given on dealing with fintechs or other third-party providers. Go through that. Have your contract provisions, the right to audit, the mandatory disclosure of any litigation or enforcement actions, site visits, annual reporting or quarterly or daily. You know, some of these systems can give you really good detailed reporting. So again, based on that risk assessment, what are your mitigating controls going to be? All in the spirit of understanding the industry, because you can't bank what you don't understand, or you shouldn't anyway. They do have some unique financial needs and concerns. They need you to understand their business because they want that, I'm sure, as a business advisor. But sometimes in some state licensing scenarios, the product is mandated to be tracked from seed to sale. So if you can get into that, into some sort of integration or vertical integration where the same licensee grows all the way through to sales at the dispensary. That's how Florida is. I'm most familiar with that infrastructure. It's kind of easy to track the product and the sales from the product. I mean, there's not many other widgets, I would say, that you can track from their initial ingredients all the way through to the sale. So there's that aspect that's kind of unique if you can tie into it. Merchant payment is a huge issue for them. The card industry does not want to be in cannabis space, and I don't think, again, Safe Banking Act is going to help that. There has been this go around for these cashless ATMs where the transaction is coded as an ATM withdrawal, whatever dollar amount is rounded up. The industry has said that is a no-go. That is not legal. Any of those workarounds are not legal. There are some third parties that will do ACH payments for your customers, and I think that's something that if you're into that, is worth looking into. Chatter out there in the world of cannabis says that just there's a lot of due diligence on the end user side. And so they're not necessarily interested in that. They're fine with cash. So cash handling. Don't bring it into your branch. You have armored car service, take it directly to your account at the Fed. You do need to make sure those CTRs are filed though, and monitor that level of cash. There is a high point of entry to get into this business, cost of entry, because of the licensure and the infrastructure that's required. And unfortunately, there's little access to credit from traditional lenders. That is starting to change. I think as depositories understand the business, the cash flow, some of the risks and operations, they're more willing to extend credit. But there's some, concerns. You can't, accept assignments of rents and leases. Okay, you can't get that. That's a federal statute that prohibits that. Hope I don't offend anybody by using the word crack house. That's actually what it's referred to. But the thought being is, you're not going to be the landlord or tenant of that if you needed, especially if you needed to foreclose or take ownership. Fannie Mae does now allow loans to workers that are not owners over the 25% threshold if there's a W-2 issued. SBA has some prohibitions as well. Another thing to think about is Internal Revenue Code 280E. And, excuse me, this is regarding primarily drug traffickers rules that says you cannot take deductions for your business expenses. So you think about a typical business, the cost of creating those sales is deducted from the revenues for the net to be taxed. They don't have that option. So they're paying very, very high tax rates. And that makes it very, in some cases, not really profitable. And you don't have bankruptcy as an option, so you have to think about that if you were to give either extend credit in some way. And I think number 9 is the biggest. Again, those CPAs and consultants, they are in this industry, they understand the risks. And if your potential business has somebody like that, go talk to them, understand what they know, get them to give you that information. It's going to be a better, smoother ride. And if they don't have somebody like that, maybe recommend that they find a good one. All right. So best practice number 1 was the risk assessment. Best practice number 2 is ask all the questions. And so that has to deal with the legality of the business, what is the state law requirement, as I mentioned, as well as doing your enhanced due diligence on them. Do they have a culture of compliance? Generally, yes. I mean, cannabis is highly regulated. You should find that they are already very in tune to the requirements. Again, if they're marijuana, they don't want to become hemp. And if they're hemp, they don't want to become marijuana. Nobody wants that license taken away. The legitimate ones will really have a good program in place. So that's where you want to be. That's your, sweet spot or the blue waters where you want to be. Recognizing though that they are kind of, they've been in this gray area of banking for a long time and not necessarily super trusting of institutions. So you could have, in some cases, some difficulties getting the information, but expect it and demand it and understand it to bank it. So what is the applicable law? Just kind of a refresher, these are high level, know the rules. You don't need to be the expert, but you need to at least know what to ask your customers or potential customers. The customer needs to know it. They need to show you that they are well aware. One thing about hemp, and I alluded to it before, but just to rethink, it's state specific. And if the state doesn't have a program that the USDA approved and they haven't prohibited hemp, then by definition or by default, really, any hemp related business will be following the USDA's general rules. Now, they don't go into all the end processing of hemp. It really just kind of relates to the beginning stages, the grower and the initial processing, not the location of retailing and all that other stuff. So you have a little bit of more gray area if you're working with the USDA hemp program, but the states generally are going to have good programs. Depending on their levels of funding, they'll have exams to test the THC. I did already mention the total THC there, so I'm going to go ahead in the interest of time and move on. Some issues are arising in hemp. We don't, just think it's all legal. Well, the CBD has, by the way that it is used, it implicates the Food and Drug Administration or the Food, Drug, Cosmetics Act. If it's brought into foods or like the gummies or the beverages that we're seeing out there, the Food and Drug Administration needs to approve it. The reality is they're not going to. I mean, they and the Food, Drug, Cosmetics Act are kind of bound by the DEA. Again, it's federally illegal. So they're not going to approve cannabis, marijuana being entered into a food additive or dietary supplement. And now CBD was classified as a drug under a recent Epidiolex, I think is how you say it. Anyway, so that's now considered a drug. And so we're really in a lot of gray space. If you have a customer who is putting CBD in food additive or dietary supplement or makes any health claims, you have a higher risk situation there. And so it may be legalized at the state level. For example, Florida allows hemp to be CBD to be brought into beverages. Food and Drug Administration does not. So it's very gray area. That's when your risk assessment really comes into play. Other things, we've got an issue with what happens when it turns hot during processing, because the heat of processing, even though it starts and meets all the testing under 3.3%, and it will at the end when it's all done, what happens if in the middle it gets hot? And so there's some legal issue with that, the extraction rule. Synthetic derivatives, they're not even hemp, but they actually have some some really scary kind of health concerns. FDA is working on that. So be careful if your customer is getting into any of those. Delta 8 is an issue, hemp derived, because again, well, Delta 8 is not the THC that is defining whether it's marijuana or hemp. It's very similar to it though, but true hemp won't have high Delta 8. So it has to be chemically processed to get that high Delta 8. So because of that, even though it's hemp derived, many states are prohibiting it. So that's something to look at if your client is wanting to be involved with Delta 8. What does your state say about that? Marijuana legalities, this is obviously super, super high level, but thinking about how it came into your state, if it was legislative, you're generally going to have a more detailed regulatory infrastructure versus if it was passed by referendum, although many of the states here recently where it was passed are taking their time in getting the legal and regulatory infrastructure around. We have obviously other states lessons to learn and to try and do differently in the newest programs that are coming out. Whether it's an open or competitive license process, if it's competitive, we generally see the who's who of business leaders getting those licenses. And so you've got kind of the stakes are a little higher in terms of understanding the laws and regulations there. Another important thing to think about is the local cities and towns, municipality rules. I mean, that is actually really big. From my understanding, California, and I know there's several on the call, it's open recreationally and medicinally, but there are like a lot of cities and states that prohibit it. So it can't just be put anywhere. And I think it's a lot like, bars and restaurants. And so a lot of the attorneys kind of that specialized in that, alcohol licensing regulation are coming into or have come into the marijuana space to kind of help also with those zoning and local restrictions. But if you've got medicinal use, you have these issues of, dealing with the medical commission, which conditions are allowed, what are the methods of use, what are the issues with transportation, and an adult use also limits on amounts, methods, and grow at homes. And there's just a lot more to it. So again, you're not going to be an expert. You just need to know the questions to ask. And speaking of that, when there is a limit on amounts, I don't know how much is a gram. So I put this picture here to kind of give you some reference what we're talking about. And some, just for information, some states have in local areas have kind of decriminalized marijuana, even if they haven't legalized it. And so there's some amounts under which no action will be taken, and some of them are big, so it's surprising, but kind of keep that in mind for pictures. So other things to think about, depending on what point of the life cycle of the product that your potential customer is going to be in. I'm not going to go through these, but basically, again, there's going to be legal requirements on each level of service. Get to know them. So the second part of asking all the questions is knowing the laws. FinCEN gave us hemp guidance on due diligence. Sorry, the second part of asking all the questions is doing your due diligence. And so FinCEN gave us some guidance in their hemp guidance, as well as in their marijuana related guidance. Some of the things to understand. Sorry, I'm flipping through here too fast. Hemp, marijuana. This is kind of my summary of those regulatory guidance. And in my opinion, they're pretty lean. They're absolutely doable. So like the next 6 slides here, for your benefit, I've got kind of my breakdown of some practical applications of customer due diligence specific to cannabis related businesses. Things to ask, and they will also prompt you to go back to the legality question. Oh, so where's your location and licensing? And then you go back to say, what are the restrictions in the locations? Have you met those requirements? Because any little violation along the way can get your customer in trouble. And then when we go through the priorities, we'll see additional questions to ask. Here is, let's see, is there anything else I want to mention on this slide? These are yours to take away, maybe create a checklist from them. I'm not in the business of creating a banking cannabis in a box program. That would be too much liability on my part, but because it's always changing too. But here's some things to just kind of keep in mind in asking. I like this one about requiring a referral from an existing customer or a prior bank or vetted referral source. That way you know that they're kind of in that culture of compliance that you've created with your existing customers. Enhanced due diligence is really the steps you take once you know that they're in the business of cannabis, whether it be marijuana or hemp. And it's not a one and done, it's really an ongoing. And, many of our clients will review these customers quarterly. Obviously, you've got SAR filing requirements, so you're going to be reviewing them quarterly anyway, but with a deep dive at least annual level. And in that, you want to see, have financial statements, compare them to some of the activity you're seeing. Does it make sense? They should have had some exams at this point or an internal audit about their compliance with the requirements that they have to be a part of. The compliance officer, again, I go back to, they are in the business of compliance too. I thought it was just for giggles, I got onto LinkedIn and Googled or put in the search bar, cannabis compliance officer, and a whole bunch of banks came up, the compliance officers of banks, but also of industry. So it is a subset of being a compliance or BSA officer to kind of specialize in the cannabis space. The negative news searches are super important. I know you all are used to doing these on your regular high-risk reviews, so it shouldn't be too much different. Where it is different is these 8 priorities. And what I've done, I kind of grouped a few of them together, and I want to go through them in the remaining time that we have. One of the priorities is to prevent state legal businesses being a cover for other illegal business. And this is happening. Anecdotal evidence and otherwise says this is happening. We also want to prevent revenue from going to gangs, criminals, and cartels, and prevent violence and use of firearms. So some of those, I don't really know how you're going to prevent them. But I do have kind of a list here of red flags that I've taken from the regulatory guidance or my own experience. If they're getting more revenue than you would expect to see or compared to the competitors that you have, also in your portfolio of clients, then that's a red flag. Obviously, looking at their tax reporting versus their deposits, differential there, structuring, rapid deposits followed by withdrawals, getting it back out to the cartels or whoever really wants their money. Third parties making deposits, that would be unusual. Commingling funds with their personal accounts. I mean, obviously, there's going to be some of that for investment, repay, and loans and such, but not on the daily. And that would be an unusual situation. A surge of third parties offering goods or services to the business, such as equipment or shipping. Having these change in vendors on their side without an explanation. Obviously, it can happen, but could that be a way that these illegal businesses are getting their dirty, greedy little fingers into your legitimate business? And then, of course, negative information, criminal records, any kind of drug issues, violence, or enforcement actions. And so what are you going to ask for? What are you going to ask for to get those red flags? Do you have the seed to sale or actually point of purchase tracking? Can you see what are the levels of sales? Because then you can basically directly match them to the deposits with some allowances for delays in deposits or cash being withheld. I mean, a lot of these businesses are, again, not trustworthy. They're going to hold cash on site or in the walls of their home and, their house or wherever to not, what happens if their assets get forfeited? They're always thinking of plan B. On the account application, you can ask these questions. You're obviously going to ask for tax returns and financial statements. Your systems may give you some velocity alerts. Knowing the suppliers, looking at all accounts in a relationship when you do your reviews, not just the one that touches the plant or that's the most active. Sources and uses of funds is always basic, blocking and tackling. And these other ones, I think, are self-explanatory. So the fourth priority here is prevent diversion of marijuana to other states. So one, red flags are they're engaging in international or interstate activity. So you could see deposits from locations outside the state which they operate, making or receiving large transfers, otherwise transacting business with persons or entities located in different states or countries. Again, transporting across state lines, cash or product is not legal. The owners or managers residing outside the state could be a red flag if they're, obviously they're perhaps receiving funds from the business across state lines. That's something you're going to want to talk to legal counsel in all the states and make sure that any transfers are going to be legal, at least not blatantly against the red flags here. So reviewing their training and their transportation policies and procedures, knowing the other side of credits and where checks that are deposited or presented for payment are coming from. You can see that on the MICR line. And to the extent everything's coming by ACH, that's going to be a little bit harder. And so the last four priorities: distribution to minors, preventing drug driving. I mean, you can't control once the product is out. The business can't control where it goes to. Being in close proximity to a school, that's, not allowed, probably. I just don't understand that. Doing a site visit and comparing to schools, maybe just looking around the location to see if there's, a hangout of kids. There's a convenience store nearby that the kids kind of, congregate at, or a park, things like that. You're just not going to know, but you can do kind of the best you can. Looking at their policies, procedures, and training is going to be important. I'll just mention it for anybody who is wanting, after hours information, slightly humorous, slightly concerning about the industry, that Netflix has a series on now called Disjointed. And the distribution to minors actually was one of the episodes where one of their businesses, it's a cannabis business in California, I believe. One of the customers distributed to minors in the parking lot right outside the dispensary. And there happened to be a neighbor in the strip center who is very much against the cannabis business and really wants them out. And so he reported it and they were raided. And so, I mean, it's kind of humorous. It's got Kathy Bates in it. It's just mindless TV watching. There's my non-compliance advice. And then also preventing possession or use on federal property or cultivation on public land. I mean, if they're growing it, they're going to have by geography, by can't think of the word, but actual track, GPS location where the property is that the product is grown on. So site visits, crop location is going to prevent that problem. So 6 minutes, I'm not going to go into details on filing SARs, but that is your third best practice. Do it. Go which way you decide regarding the ancillary businesses. Hemp, we have guidance. You don't have to file SARs solely because they're engaged in hemp in accordance with applicable law. It goes back to asking all the questions, making sure you know what the law is, and more importantly, that your customer knows what the law is and is positive or very, very sure that they're in compliance with it. This is really not telling us anything we didn't already know, but I will say, unlike marijuana-related businesses, because under the FinCEN marijuana guidance, you are required to file a SAR solely because your customers are engaged in the growth or cultivation or dispensary, any of that of marijuana, because again, it is federally illegal. The question is whether you choose to, in good regulatory guidance, not file SARs on ancillary businesses that you know have received over $5,000 in funds from cannabis. Here are some red flags regarding hemp for SAR filing. Obviously, if they're not in a state where it's legalized, if they're using it for as a front or pretext for money laundering, they're trying to disguise real marijuana, and they are not giving you information, or they have had their license revoked. I mean, it's kind of like the 8 priorities on a reduced level. So STAR guidance, marijuana limited, and here's information for you on that. Marijuana priority, and here's information for you on that when they're not complying with the 8 requirements. And marijuana termination when you close it. One thing I'll say here, I have been involved in an institution who, again, operated their kill switch and closed the accounts, and we could see the money moving from their bank to other financial institutions. And because I have a lot of broad reach on our client base, I know these institutions think they're not banking cannabis, but they receive proceeds of it. So what FinCEN guidance asks is if you do terminate the account, let the other FI where you see those funds go know. Use that 314B to let them know. And I'm a fan of 314B, and so you should be too. No, if you're not, I understand. But that is just being a good partner in the industry to let the other party know. And then finally, hey, listen, there's some good guidance out there that of course isn't law, but it is been thoughtful, I think. California Department of Financial Institutions put out a guidance memo. The Conference of State Bank Supervisors have a job aid for those BSA people and examiners in the industry on things to look for and licensing issues. And then looking at consent orders is always very educational. There was one just recently, earlier in 2021, against Live Life Federal Credit Union, and you can see what is the asks that the regulators put in place for that credit union to really beef up their MRB-related business offerings. So that is the end. Let me go ahead and close this out. I'm going to look and see if we have had questions okay, we do have questions. So I'm going to look forward to any questions from the survey, and we'll make sure when we issue that, if I can get to these in time when we issue the link to the recording, that I'll have these questions answered to the best of my ability and availability. Thank you all for being here. Nancy?
Thank you, Kristen. No, thank you, Kristen. We did get quite a few questions, and as Kristen just said, if she has time, she'll answer them and we'll provide them in our follow-up materials tomorrow. But thank you again, Kristen, so much. Very informative session, and I did get some comments on some institutions that aren't currently banking marijuana businesses but are developing a plan, and so maybe your presentation will be a little info for them to help them along. I'd also like to give another special shout out to Engage FI for collaborating with us to bring you this webinar. Thank you so much to the Engage FI team, and be on the lookout tomorrow for a recording and a link to download the slides. Also check your spam and junk folders. Sometimes our emails get caught on there. So if you don't receive it within 48 hours, just go ahead, email me, and I'll send it right over to you. And I think my last point is that as soon as this webinar ends, you'll be prompted to complete a very short survey. Please leave your feedback, any additional questions, and thank you again for joining us. We hope you have a great day. Thank you.
Bye.